expected to go over or close to $400, if not above $400. So be prepared. If you haven't already booked a ticket for later this year, that is coming your way. By the way, they are up 72% since January. One reason for the higher airfares, A, demand is there, and B, the airlines, they've got to offset the higher cost of jet fuel. It is at a near record high, and it does not show any sign of coming down anytime soon. So as a result, the airlines passing along as much of that cost as possible. And so far, for the most part, they've been able to offset the higher jet fuel costs. Number of airlines have raised their guidance. The question in terms of revenue for the second quarter, the question is, will they have a smooth summer operationally? Delta already asking their pilots if they can pick up an extra shift or two this holiday weekend. And we are also seeing them trim their schedule by 2%, like other airlines who have done the same thing in order to say, can we be in position to make sure that we do not have any canceled flights, no operational hiccups that we've seen from time to time in the industry over the last year because of the tight staffing when it comes to the number of pilots who are available, number of crews, etc. One last thing, as you take a look at the airline index, keep in mind that we've heard from a number of airlines this week who have already raised their guidance in terms of revenue for the second quarter. We'll hear from more next week. There are a couple of investor conferences, David. The bottom line is this: the airline stocks, they're not really doing anything right now. And for the airlines, they're going to try to make as much hay as possible this summer. They will be profitable. How much profit they will be able to turn depends in large part on what happens with jet fuel prices.
Yep. Phil, thank you. Phil LeBeau. We're going to move from airlines to automobiles as well, taking a look at rising gas prices, of course, ahead of the holiday weekend. Joining us now, ARCO Chairman and CEO Ari Cutler. ARCO is one of the largest convenience store operators in the U.S. and supplies fuel to retail and wholesale sites. Ari, just first off, what are you seeing out there in terms of prices and in terms of any expectation of demand destruction as a result of those high prices?
Yes, good morning. So what we see is, we see an increase in demand. There is no question about it. I think demand is back to pre-COVID, pre-2019. However, price increases are creating a lot of challenges to every retailer. I mean, prices today are at the highest level that I remember, $4.59. This is the average price across the country. And if you compare it to same time last year, we're talking about $3.04. I mean, this is a $1.55 increase since last year. We see the consumers are driving more, but they're coming to our stores more often. They're coming to the pump more often. So, if you're looking at 2020, just, pre-pandemic, we're talking about 11 gallons, per fill up. And today we are around 8.5 times. So, as I said, this is creating a lot of challenges, to many of our consumers, and we're trying to be creative. We're trying to make sure that, we provide them the right product. We are very, very competitive. Given that we have over 3,000 stores across 33 states that we're supplying fuel, I mean, we are being ultra competitive on fuel prices. We make sure that we tie their inside stores, inside sales, that those guys are coming into the convenience stores to buy essential product. We make sure that we have the right product in, and we make sure that we tie the product to their fuel consumption.
Yeah, well, you mentioned the convenience stores themselves. I did notice same-store merchandise sales were down 3.5% versus a year ago, and they were up 6%. Are you seeing people spend less in the stores since they're spending more at the pump?
As a matter of fact, people spend more in the stores. They're just coming less often, or actually more often. I'm sorry, they're going less often between the pump and inside store. But you mentioned the 3.5%. As a matter of fact, our inside same-store sales are up 9.3% if you actually exclude cigarettes. So people are buying other product other than basically cigarettes. They're buying other valuable product, and we make sure that we have the right product in place. It's all about value right now. You really need to be creative in order to utilize promotion. You need to work with your suppliers. I can tell you that we just moved to automation. We just finished this project yesterday. Iced coffee, we enter into the iced coffee business and coffee business. We install in 525 stores bean-to-cup coffee machines. and our loyal customers can buy iced coffee right now for 99 cents. And the reason I brought it up is because there is no question there is labor challenges in almost every retailer is facing them, and we need to figure out a way how to be creative, how to be more efficient in order to provide great prices to our customers.
And you mentioned labor as well as one of the key concerns there. How are you attracting and retaining employees, and what do you see on that picture?
Sure. So, we're not different than any other retailer. Everybody has the same challenge, but going back to being creative, we are the 6th largest convenience store operator in the country. We have to be creative. We need to make sure that, we retain our employees. And as a matter of fact, just this coming Sunday, what we decided to do, given, the increase in fuel prices, what we have decided to do that every employee who works for us, any associate who work, within our locations, will get $500 during the summer for working 500 hours. And again, it's an extra $500, and that's going to help them, to go through the summer. And those are the things that you have to do in order to keep retention.
Yeah, Ari, appreciate the update. Thank you.
Thank you.
Coming up next.